Hi Forex traders, welcome back. This is Carrie's Trading Institute and this is the weekend commentary for the dollar and foreign currencies. And this week we are going to be analyzing the dollar and the foreign currencies so that I show you my expectations for the dollar and what's the current institutional order flow, right, of the dollar and the foreign currency pairs. All right, so but before we do that, we will like to start by studying what's underlying on the fundamental basics. So we will have to study forexfactory.com. We just go to forexfactory.com and we search for the calendar, and what we are looking to identify right here is to identify the high and medium impact news events, because this will be of high interest to us. And while we are doing that, we are also taking notes of news events that we are not supposed to be trading, like the NFP, like the FOMC, and also the CPI. All right, because this type of news events are usually very fast and they come with a level of liquidity injection that has the ability to blow up your account if you are not in sync with the marketplace. All right, so but basically we need to see our trading day having at least one or two high and medium impact news events. It tells us that this is going to be a good volatility trading day. All right, there's going to be liquidity, there's going to be volatility in the marketplace. Okay, the absence of any of such high or medium impact news events in any trading day will signify that we have a low volatility trading day. The market may react very slowly in such a day. All right, so we can see that on Monday 12th of June 2023 we only have two medium impact news events that are going to unfold on the dollar and on the CNY pairs. All right, and this is going to come on the 12th of June 2023, 7 p.m. GMT +1. That's when we expect to see these news events coming. 6 p.m. GMT +1. That's when we expect to see this medium impact news event unfolding on the dollar. Okay, then on Tuesday you can see that we have high impact news event that is going to unfold on the GBP pairs, right, by 7 a.m. GMT +1. So this will reflect relative to your zone and local time in your country. If you want to set your Forex Factory to reflect your local time, all you need to do is to go here and click the time here, then you set your time. Then we have a medium impact coming on the Australian dollar around 2:30 a.m. This should be around the Asian session. Then we have 1:30 p.m. we're going to have high impact news coming on the dollar, and the type of news event here is the CPI and the CP. Okay, it's all the CPI news event unfolding 1:30 p.m. on the Tuesday 13th of June 2023. So I will be taking note of this trading day, especially during this time. Okay, then we still have a high impact news unfolding around 3 p.m. GMT +1 on the GBP pairs. All right, so you just study all of the trading days that you see on the economic calendar, because this will tell you when to expect the liquidity injection into the marketplace. All right, guys, so because of the CPI coming up on the Tuesday, so we might see a very tricky Monday. Because of the CPI coming on Tuesday, we might have a consolidation market on Monday, or we might have a very tricky market on Monday until 1:30 p.m. for the CPI to inject that volatility in the marketplace. So let's go to the dollar index and see if we can find something significant on the dollar. So this is the dollar index weekly chart. I would like to define institutional order flow starting from the monthly chart. Okay, so this is our monthly chart, and as you can see, we like to do three things. The first is to study where price has traded from, then where is price currently, and then where is price going to go into, where is the draw on liquidity. Okay, so you can see that first we had a bullish market, right, that traded into a bearish mitigation block, and the sell side imbalance by side inefficiency on the monthly time frame. All right, then we had that rejection to the downside, price retraced into a discount fair value gap, or you can call it the buy side imbalance and the sell side inefficiency. All right, this is also in sync with a bullish breaker block, because this has formed, this was a higher high, then we had a lower low, price formed a lower low, then price broke that high, so we had a breaker block around this region, so we had it with a fair value gap, and this is high probability. Then price traded into that level, rejected off for the first time, rejected again the second time, and the third time we now see the monthly time frame creating a bullish order block. This is very interesting because a bullish order block on the monthly time frame is not a child's play. It's very significant, and we like to pay attention to it. Okay, so we like to see so this is where price is currently. Price has retraced into that discount. Why is it discount? Because we have a trading range, a defined trading range between a low and a high. When you use the Fibonacci tool to measure between this range, you'd see that price had traded below that discount level. Below 50% of the range is a discount, and has taken out sell side liquidity pool residing below that relative equal lows. All right, so currently we would like to see price retraced into a premium market before we continue to sell the dollar into this deep discount mitigation block. All right, now it's important to take note that the current seasonal tendency of the dollar is that we are still expecting the dollar to throw some level of bullishness in the marketplace until sometime in July, before the dollar starts to crash into the end of the year. And I'm looking at this mitigation block as the drawn liquidity and all of this buy side imbalance and the sell side inefficiencies, all of this one-sidedness in price delivery. I would like to see repricing that rebalances this inefficiency, because when the market is trading up or down, institutions are looking for two things. Number one, the institutions are attracted by liquidity. Number two, the institutions are looking to rebalance previous inefficiencies that were created in the marketplace. So we are looking to see some of these inefficiencies rebalance, and some of these inefficiencies also rebalance. All right, so we have a bullish order block currently. Institutional order flow of the dollar is bullish because we see the dollar taking out the previous monthly high. So we have a bullish order block at a significant institutional reference point, which is the discount fair value on a breaker block. Okay, I'd like to see the dollar through some level of bullishness and take out this high. All right, there's a high there. So what is residing above that high is called liquidity pool, the buy side liquidity pool residing above that old high. All right, so we need to see price take out that high and rebalance that sell side imbalance and a buy side inefficiency, and you can see that in between that inefficiency is also a bearish order block, and this is a previous volume imbalance that was violated by this bearish momentum candle, violated the previous volume imbalance by the left here. So this will serve as future resistance as the market approaches this level. I'd like to see that this level resist the dollar to trade into sell side liquidity pool residing below these lows and rebalance the inefficiencies and possibly sit on the bullish mitigation block. All right, so this is my take on the dollar. So let's see going into the week if we get to see that. So you can see that this is the monthly markup reflecting on the weekly time frame. This is top down analysis we're doing. So currently price created a range. Okay, this is a bullish expansion to the upside, and price has traded into a previous fair value gap that was created right here. All right, you can see it here. This is a fair value gap between the low of the first candle and the high of the third candle. Fair value gaps are a 3-candle price action where we see price creating a gap between the low of the first candle and the high of the third candle, or the high of the first candle and the low of the third candle. Depends on which scenario the market predisposes. Okay, so this is a bearish order block, and 50% of this candle here is order block mean threshold. Remember, I've taught that when using order block, we like to use the candle with the largest body. So this is a bearish order block. Price has traded into it, and the dollar starts to pose a bearish repricing. Where are we looking to see the dollar reprice into? We are looking to see the dollar trade into this inefficiency, the gap here, or we like to see it trade into something called the implied fair value gap. Okay, if the dollar wants to reprice, it can reprice into, so we are outlining all the possible places to resist, to support the dollar to move upwards. So number one, okay, this was previous implied fair value gap. 50% of this candle wick, I'm just approximating 50% of this candle wick, it's implied fair value gap. Then we have a fair value gap, then we have another implied fair value gap. All right, so if the market trades into that level, we like to see some reaction to push up this guy to the upside. All right, so however, because the monthly time frame is just beginning to create that bullish momentum, we might not see that deep repricing into the bullish order block, because it might create an imbalance or an inefficiency while trying to push to the upside, especially this month. Okay, now if you also take a look at this, I'm seeing previous fair value gap here that was violated. Remember, I've also taught that for some of you who are my VIP paid students, I've taught that when a fair value gap is violated and price returns to it, it will either serve as support and resistance. So this is also another dynamic way of using support and resistance. This is fair value. Okay, you can see between the low and the high of the third candle. All right, price violated this by this bullish momentum, and then price returned into that level. This might also support that bullish movement into the buy side liquidity pool residing above this, and into the monthly sell side imbalance and the buy side inefficiency. And also we are looking at that monthly bearish order block and the volume imbalance that was violated. Once price returns to it, we would like to see a reaction at those levels. Right, so this is it. I like to keep my charts very clean, so that's why sometimes I will just have to remove these things. So let's go down to the daily time frame so you can see how I'm doing the top down analysis from the monthly to the weekly to the daily time frame now. So this is the daily time frame, and look at what we have on the daily. You see that level where we have the previous fair value gap violated, that is going to serve as support, also has a bullish order block with a fair value gap attached to it. Look at this, guys. It has a bullish order block and it has a tiny fair value gap attached to it. The type of fair value here is called implied fair value. 50% of the first week, 50% of the week of the third candle, that's also implied fair value gap. Remember, the most valid order block is the one that has a fair value gap attached to it. So what I'm saying is that I'm seeing the dollar going to push into this daily buy side liquidity pool residing above that high, and also because there is a draw liquidity right here, the volume imbalance of the daily time frame. You can see how we are refining these things. The volume imbalance, you can see that if you are finding it difficult to understand this, or you are watching this for the first time, please don't forget to click the subscription button and make sure you turn on your notification bell so you stay updated every time I post a video. So this is that volume imbalance. You can also watch the video on this channel where I talked about institutional reference point, it will clearly explain all of these institutional reference points. So we are expecting the dollar to push up into buy side liquidity pool here, into volume imbalance, into buy side liquidity pool, into the monthly and weekly objective, because that's the drawn liquidity. Remember, the higher time frames are the main drivers of this market. Okay, so that is why the institutions always like to position themselves on the higher time frame. So at this point, we like to go down to the 1 hour time frame and see if we have something interesting, and it looks like we do. On the 1 hour, look at how price took out the sell side liquidity pool residing below these lows, and price traded into, you can see that price took out the sell side liquidity pools residing below these relative equal lows. All right, and then price is now sitting on the daily bullish order block that has a fair value gap attached to it, and also the weekly fair value gap that was violated. All right, if price returns to it, it's going to serve as, this is our support. Okay, then we have price took out the low here, broke structure to the upside. Then we should be buying the dollar if the dollar reprices into a discount fair value. Okay, so if you use your Fibonacci between the low to the high here, right here, this was the first retracement, that fair value gap would have been the buy, and your stop loss below this low. So the dollar started to buy when it traded into this fair value. I guess this is the ICT silver bullet strategy. All right, you can see that very amazing. Price traded into it, pushed to the upside, returned to that level, then start to push to the upside. Now we want to see a heavy momentum to take out the relative equal highs here, all of these low resistance liquidity pool. All right, above this, we like to see the market trade and take out all of these highs. All right, that's what I'm seeing starting from the week. Okay, then another possible scenario is that the dollar might want to still reprice into that fair value, deep fair value of the weekly time frame, but I really don't see this happening. If the narrative changes, I'm going to do a video to tell you that yes, the narrative has changed and we are going to trade into that discount level. All right, guys. So guys, this is the GBPUSD and this is the monthly chart. So the monthly chart is still posing a high level of bullish pressure at the moment. All right, but we can still see that the monthly time frame has just traded off a bullish order block, and the drawn liquidity also here is the sell side imbalances and the buy side inefficiencies and the bearish order block with a fair value gap. But before this happens, I would prefer to see that dollar repricing to the upside. All right, before this guy starts to push to the upside as the dollar starts to crash. Okay, so currently we are seeing the GBPUSD is currently at a rejection block. Okay, this is a rejection block that price traded into and paired up this short with the previous low here, that old low by the left. That was what happened here. That was what happened here. So price traded into a bullish order block and starts to show interest to go up. Okay, price might still reprice inside this range into probably 50% of this range, which is the bullish order block mean threshold. It will take out the lows here, possibly. Okay, all these are probability scenarios I'm trying to create in my head. All right, the institutions can still do what they want to do. This guy can still push to the upside to trade into 50% of this fair value gap, which is consequent encroachment. This is also a breaker block, or it can trade into this premium bearish order block with a fair value gap. So the weekly time frame also shows us something significant. Price is currently at a bearish order block. All right, keep in mind also that we have a relative equal high right here. Okay, so price is currently at a bearish order block. We also have some inefficiencies to the downside that were created but were not traded into. This will also be point of interest we are paying attention to. All right, and also I see a level of a volume imbalance right here. So we might see price trade into these levels, take out the lows here and trade into this level, or just quickly push up to the upside, because the current institutional order flow in the GBPUSD, as you can see in the last 3 weeks, it's been taking out the previous weekly highs. Until this bearish order block is taken out, we still have the tendency to go down. Okay, so on the daily time frame, let's see what we have on the daily time frame. On the daily time frame, you can see that price swept the lows here, gave us a shift of structure. Price traded into the order block, the bullish order block, and now price has returned into this breaker block. Price created a high, a low, a higher high, shift of structure. So this is a breaker. We are also paying attention to that guy. We are not ignorant. We know that that's a breaker block. So this is a breaker block. So how am I going to clarify all of this? Is that as the market opens, all right, this evening, Sunday, okay, and going into Monday and Tuesday, I would like to identify a clear smart money divergence on the 1 hour time frame between the dollar, the GBPUSD, and the Euro USD. I need to see one of them cracking the correlation. Remember, the normal correlation is that when the dollar is forming higher highs, higher lows, we need to see GBPUSD forming lower lows, lower highs. We need to see Euro USD forming lower lows, lower highs. But once we see a crack in that correlation, a scenario where one of them fails to obey the normal pattern, that's a smart money divergence, and it's going to tell me if this is going to follow my idea of the GBPUSD trading downwards or continuing to the upside. Okay, so we watch the markets Monday, Tuesday into Wednesday to identify the high of the week, and then we get to catch 70 to 75 pips, 50 to 75 pips right from the marketplace. This is our target for the week. All right, guys, so if you like this video, don't forget to click the subscription button, hit the like button. Don't forget, turn the notification bell so you stay updated every time I post a video. Until next time, I wish you good luck, good trading, stay safe.